Welcome to Trading Lounge and the Asian Report. We'll be covering the ASX. We'll have a look at CBA and iron ore as well, as it's covering some of the resources. So with the ASX here, from the low here, I can count 5 waves up in terms of 1 and 2 here, and 3 and 4, and then a bit of an extended 5th wave here. In fact, when we look at it, wave 1 here is its length, and then wave 3 is a bit longer, and then this length here is a little bit longer. So it's an expanding trend to the upside. I can count it in 5 waves. I can also count it in such a way that it's part of a larger trend as well, and we'll have a look at that, and we've been looking at that as well. But if this is the case here, then we could pull back to the 5,800 area through here. Okay, so we know that there's resistance currently at these old highs here, so the market will struggle through here, and as we've seen before, it can really take some time through here. So if you think that this little correction through here over the last few days, through last week here, then you know, we can still get a lot more of that at this particular high here. So the other count here, if I can just go to this chart here, so from the low here, we could count this as 1 and 2, and then here as 1 and 2, and then 1 and 2 and 3 and 4 and 5 here for the 3rd wave, and then have this as the 4th wave pulling back now, and then still the 5th wave to go up for the 3rd wave, and then the 4th wave, and then of course the 5th wave here. So this is all possible here as well. I don't want to rule it out. So we've got those 2 counts there. So that brings us into this current situation here. This move down through here appears to be corrective. So that other count where we had wave 1 up here, it's probably not the case. Unless this is down for 1 here, back for 2, 3, 4, and 5, actually an impulse wave down here, but it doesn't look like that on the physical market. So whatever we're looking at here, it appears to be corrective. Now, if it's corrective here, we could count this as an ABC pattern here, and then it could move higher from here and continue to move up. So there would be certain steps involved in that. So one of the steps here that we would look at here would be the distance here coming back up to the 61.8%, which is right on this little guy here, so on that high here. So we could say to ourselves, well, that's the retracement level and we should move down from that point. And that may be the case, and we need a strategy for that. But what about if this market takes this top out here? Then we would need a strategy for that, because if the 61.8% became the support here, then we'd need to start looking at long trades there, because we don't want to fight a trend that's been moving up through here either. We want to be moving with the trend. So what we can do in that case, we know that, let's just draw this in here. I mean, it's on the hourly chart anyway, but that's just to remind us more. So what we can do here is that we know that this is 100, 200, and 300. They're minor levels of Group 1. And if we found support on top of Group 1 here, the 300 here, then we need to start looking at 500 at that point. But at this stage here, if we just move up here, we've got the sub-levels. So we've got 10, 20, and 30. So if I can just pop that in there. So we also know too, with using the trading levels, if we find support on this number 3 here, then that will take us to the next level here of the 50, the midpoint, and then we'll be really quite high at that point, wouldn't we? So finding support on top of 62.30 would be the catalyst for long trades to the upside. Okay, we'll get a little bit closer to that. Yeah, so let's just go to let's just go straight to the hourly chart, I guess, and we'll just talk about this in here. So as I mentioned, when I look on the cash market, it does count down as 5 waves, 3 waves, and 5 waves. So I have to look at it as a corrective wave here. I mean, it's possible that we could count it down as 1 and 2 here and 3 and a high wave 4 here, and then down for wave 5 here. It's possible, but this is the best fit for that. And also too, this move that's moving up through here, it's not really displaying nice impulse waves, you know. It's got like 3 waves in its first move here, so that would really make it a corrective wave. So whatever happens after this, all of this, it would be part of a corrective wave there as well. Yeah, it kind of feels like we're in a wave 4 here, because it's quite complicated. So, you know, when we're looking back at those other charts there, we can look at it as wave 1 or wave 3 here. So it does look like we're in some type of more complicated wave 4 from wave 3 here and ABC, which can pull us back to the 6,000 here. If this was wave 1 up here, then we'd be looking at this as more of an A wave down here. If even further, it would bring us down into this level here, the 5.7, the 5.8. But as it stands at the moment, it's just a retest of the 6,000 here at this point. Now, even if it came down further, it wouldn't matter, because we would be on the short side anyway. So what we really need here now is we need on the long side here. This is the 62 here, which is really, in terms of the trading levels up here, the 62 is really 61.8. So we can look at it as the golden mean and the golden ratio at this point. So it is really quite an important level here in that geometry terms there. So and we kind of expected something to be, you know, to be unfold across here. So and it's maturing a little bit. We're starting to understand it a little bit better. So this high here is so close to the 62.30 area here, and if we get support on that, then we'll be free to go to the upside. So I think that we wait for this for the long trade. So if I can just take that, I mean, normally I could say we'll just take the high out here, and that's doable as well. But I think that we even should wait for that high, you know. So even if there is a high, even if, just imagine for a moment that we do get some move up through here, all right, and then comes back down here, then it's this will be our first reference high here, this one here, okay. And we may be able to come down and get a better position here, but I think we need to be sure here. So really sitting on that 30 is what we need for the long side here. As we can see here, the market has you know, dropped here. It's tried to find support here on 62. It's failed. Found support down on top of group 1 here. We always expect to bounce off number 3. It's come back up and tried to get up and spent a fair bit of time moving through here but really it's you know, created this new high here. So, and now it's coming back and testing that. So it's really migrated from being resistance here to possibly being support here. So we need to be mindful of both directions here. This could also be up for wave 1 here and back for wave 2 here, and then moving higher here. So anyway, look, that takes care of that. On the downside here, if these lows here were breached, then we can be short from there. So I could put this up to here. In fact, I could put it pretty much all the way up to here. What we could do is we could go, if this market is going to move through here, I'll just draw it over here. It'll come down through here. There'll be a bit of a vibration here, and then it will come down and give us our first low below the level, and then that becomes our reference point here. So if I just put that, you can adjust that to where it's actually going to occur, and I'll just leave it in one thin line. So a small position there, because if that low is breached, then we'll be on our way here at that stage. And you also really want to add, copy that, you want to be adding under group 2 here. So with group 2 here, 65, 72 and 80 here, the 72 here as the resistance, as a retested resistance, is the short trade at that point. okay? And like I always say, that we're working with 62 here, so group 1 above, that basically holds it to there, and then group 2 below here, that supports it to there as well. So being support on top of group 1 sends it up, and retested resistance here will send it to the downside. On the downside here, if I can just bring across CBA here, then all this move down here, this is what I've sort of had here for this, which is from this top here, wave 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 here for the third wave. So I've always looked at this one here as being corrective, and it has caught me out a few times, and but it's still a corrective pattern here. We're looking at it to come back to the wave 4 of 1 lesser degree here. So this certainly may be in this particular pattern here now coming down. So I mean, all of these moves up here, it just doesn't appear like an impulse wave. It looks, they've got overlapping wave structures, so it looks corrective. But the thing is really none of these lows here have been breached before. So if they're breached, then that confirms that we will be coming down. But obviously, yeah, what we could do is use the 72 here as a retested resistance. There'll be plenty of support at 70, so we'll get a nice bounce off that point there as well. But we should come down to 62 over here. So there'll be strong support here for this. I don't think this wave 4 will get any bigger and uglier, because when I compare it to the previous wave 4 here, it's 60% bigger. I mean, much bigger than that, but that's what I would normally look for. I'd look for each structure to be roughly 60%, 61.8% bigger than the previous one. So it does appear that we've got a bit of a bearish scenario occurring here. So we'll just keep an eye on this. But on the resource sector, we know BHP and Rio and all that are quite trending to the upside. So we'll just, instead of looking at Rio today, we'll just look at iron ore here. And I can see that even without this 1 and 2 here and 3 here, I can see that just from this daily chart here that we've got sort of a wave 1 in here, and we've got a wave 3 here, and we've got a wave 4 here. Now this hasn't finished very nicely as an A wave and a B wave and a C wave here. So this wave 4 may get a little bit uglier here. It may be the A wave to here, then an A and a B and a C wave to here as a B wave, and then a C wave coming into this space here and then moving up through here. It may do that as well. Sure, it can just go straight up from here as well. It's just that this little move in here doesn't give me 5 waves as a nice A, B and C here. So it looks like it's an A wave to here, then an A and a B and a C. There could be another little high in here too and move down. But the main point here is that the trend is bullish here. That's basically what we're looking at through here. Wave 4 normally breaks the trend line here as well. So yeah, but anyway, that's resources up, finance to the downside there. Okay, we'll have a little look at the NIFTY. Not that we've got any trades in here now, so we've had a nice little run here, and we're at this level here, the 11,500. So it's a medium level. So it's halfway between 13. Lost the plot there, doesn't matter. Anyway, with this one here, we'd been long here, we'd been moving the stop up, we went long again here, we took part profit here, got back in here, and we're taking profit here. Now I can see that it's going to move up a little bit further here because we've got wave 1 and 2 here, little third wave here, and we can look for a little fourth wave and a fifth wave back. So our target up here has been the 11,650. So that's where that can move to there. So I'm not interested in this market anymore, because we trade to a level. We basically trade to a level and we get out. and then we just allow the market to do its thing, and then we just wait for the setup. If it's going to be long, then it'll be over here. So we've got the classic trading levels pattern here, the arrival, the reaction, the first high above the level, then the corrective pattern. And if it finds support over here, well, then we'll go long from that point. We don't want to get chopped up and lose money in the corrections here, right? The corrections just allow you to take your money when you know they're going to happen, which something will happen here. So it just allows you to free that money up and go find another trend at that stage. You just don't want to make the money in the trend and then give it away in the corrections. You've got to kind of you got to get over that. You have to you have to spit the dummy out. You can't be attached to the market just because it gave you some money. So it's it giveth, it taketh, it trends, it corrects. So, alrighty, that's it. So thanks for tuning in. Cheers.